morning to all traders and welcome to Market Insights. Today we're going to look at the cross currencies of the emerging markets. We do know that currencies have declined dramatically since was March back in the when the coronavirus first cases exploded. They've all seen a reversal and actually strengthening against the dollar, as also dollar is weakening. However, there is one of those, the dollar against the Turkish lira, that doesn't really seem to have taken a breath on this rally just yet, as tensions between Turkey and Greece are deteriorating or escalating, if you may, the situation, actually, the relationship between Turkey and Greece. Actually, that has happened in the past many times where the two countries have also came close to conflict. But this time around, we have some news giving us information about rising tensions over claims to gas and oil in the Eastern Mediterranean. So obviously, if we take into consideration the economic, the macro data as well from the Turkish economy and how policy-making decisions actually are being made and what those are, then we might see a bit more upside for the dollar against the Turkish lira. Now, the other pairs, obviously, and emerging currencies in general, are very dependent on the oil, which makes it most of them actually hang on the performance of the oil market. So how the US/China trade war is going. So between relationship between US and China, actually, how do they get along? And over the past few days, we've seen some good headlines coming up. For that reason, of course, we also see the oil markets being still trading close to the 42 level, stuck up there actually without a break to the upside or to the downside, which means that since the investors are not yet worried about selling out and taking profits, that's why the markets are not falling. That seems to be a good indication that the US-China, at least sentiment going forward, is looking quite good. Now, that said, we have the Mexican GDP data today to keep an eye on. So for that reason, I'm going to also at the USDMXN there. I'm going to see at the USD against the South African RR as well, because we have the CPI numbers coming in. And also the USD against the Norwegian krona, as Norwegian krona seems to be the one doing very well compared to other emerging markets. And that's probably also because the oil prices remain elevated. Now, starting on the dollar against the Turkish lira, we'll be looking at this as 1, 2, 3, 4, and 5. And we are 1, 2, we are in the midst of wave 3, we'll see wave 4, and then another move to the upside. So I really look at this potentially even reaching the 10 levels or so, 8.5, 9, 10. We're looking at route numbers over here, of course. We've had in the intermediate degree 1, 2, 3, and 4 potentially done. And we're going up for wave 5. That looks like 1, 2, 3, 4. And we're going to get another one for wave 5. Okay. Now, the other scenario, of course, is that this is an ABC. This is an ABC. And we're going to see either an expanded or a running flat for wave 4. Okay. And wave 3, of course, is down here. And this is also likely to, another very likely scenario, we could just have wave 4 coming down here as a sharp correction down for a double top, for a double bottom, excuse me, and then a sharp move to the upside to complete this upside move. Now, the other scenario I'm looking for the dollar against the Turkish lira is not much different, but I'm looking at the wave 4 in the cycle degree being down here instead, right? That means we've done wave 1 and 2. You know, this is a leading diagonal. And we've done wave 3 as well as 4. And this is just the last move of the last wave 5. That seems to be delivering a wave 5 actually much shorter than the previous anticipated scenario. Right? Now, let's have a quick look on dollar against Mexican peso. Over here, again, I'm looking at this as a wave 3. And just to understand, this is part of leading diagonal, right? That is, we've got potentially more space to the upside, but obviously, since we're in the cycle degree, we still have to look at this correction as a potential downside coming into play, right? So, with that said, we've done 1, 2, 3, 4, and 5. This is some sort of open leading diagonal pattern, right? And this is an ABC for an X wave X for W, excuse me, wave X here either finished up here, right, which means we're moving down for wave Y, or we might be able to see some sort of triangular pattern here because, I mean, we still trade at previous lows that haven't gone below the low of 2140 or so, which is the market, the 2020 low, to be honest, as well. So I'll be looking at this break to be the pretty much the confirmation that we are heading for wave Y rather than we're still in X, okay? And then, of course, this downside is going to bring us to around 18.7 or so. I'm looking for a rejection at the trend line and then all the way up. The other alternative I'm looking at over here is that, well, this is wave 4, okay? So indeed, wave 4 down here, and this is 1, 2, 3, 4, still moving impulsively since we haven't gone below wave 1. And now we are in intermediate wave 1. This is wave 2. We're going to see 3, 4, and 5 in the intermediate degree. This is also to be wave 5 in the primary and wave 5 in the cycle degree. That would be the end of this move. Okay, and that would actually indicate that a correction is coming into place. So there is more upside in this scenario rather than downside. Norwegian krona quickly. Either an ABC, that's a 5, 1, 2, 3, 4, and 5. Wave 1, we're expecting wave 3, 4, and 5. Potentially in the super cycle degree, this is W, yeah, and then we're going to get an X, and then we're going to get a Y because we're looking at this with a corrective view, right? And this is actually quite a good impulse to the downside as well. So it can either be a wave 1 or a wave A. So if we go to have a quick look on the alternative or a wave C, let's just say, I'm looking at this as part of wave 3 in the primary degree. So this is my wave 4, right? And still are moving in an ABC correction over here, which is wave 1, 2, 3, 4, and I'm expecting it now with the wave to take out the 859 or so, which is the 161 Fibonacci extension, in order to consider this as a final ending diagonal down in wave C, which is also wave 4. And then from there, we're going to see more upside for the USDNOK as well. And last but not least, of course, dollar against this South African rand. Well, again, a leading or ending diagonal here. Consider it as you wish. Makes no difference in the short and medium term. 1, 2, 3, 4, and 5 for A B, and a C, and a rejection down at the trend line. So we're expecting still the wave 5 primary of A, right, at the 0618 Fibonacci retracement of this move, okay? That would potentially bring a B and then the C. Or, of course, you know, this could be an ABC, right? Or we could have actually a different pattern, right? And this is what I'm looking at, the alternative scenario over here. Okay, I'm also looking at this as a 3, a 4, and a wave to the upside to take out the last wave 5. So this is again, though, part of wave 5, right? With 1, 2, we still haven't done, we're still moving impulsively. 3, that's a 4, and that is a 5. Now, this either 1, 2, and then we'll go for 1, 2, 3, 4, 5. This is going to be then 3, 4, and 5. So a multi-structure move to the upside, or it could be a case where we'll have A, B, and a C. And we're going to get another move down here to complete wave C of 4, right? And then we're going to start again anew with 1, 2, 3, 4, and 5. So I hope that was helpful. If you have any questions or if you have any comments, do not hesitate to engage on YouTube, and I will get back to you as soon as I can. Thank you very much for watching, and we will speak again tomorrow.